Hi everyone, welcome to the channel. My name is Ron Guth, and today I'd like to talk about a term that should strike fear into anyone who has money in a bank or financial institution in America. That term is bail-in. Anyone who has money in a bank or is a silver or gold stacker should pay careful attention to what bail-in means. Now, like a bailout, a bail-in is a way of rescuing an institution that is on the verge of going insolvent or bankrupt. In a bailout, which we've experienced here in America, taxpayers shoulder the burden of any losses that the banks incurred. In a bail-in, the bank's creditors and debtors are asked to contribute money to solve the financial crisis. Pay very close attention to that definition because it's significant. For example, if you have money in a bank, no matter what type of account, and the bank gets into financial trouble, the bank will ask you to contribute some or all of your deposits to help them out. Well, that's ridiculous, you might say. That can never happen in America, you might say. Well, listen to this. At the November 2022 meeting of the Systemic Resolution Advisory Committee of the Federal Deposit Insurance Corporation, the one you know as FDIC, one of the members of the board, Mr. Cohen, stated this, and I'm getting this right from the transcript, quote, "I mean, it's important that people understand they can be bailed in," end quote. That's a very simple statement, but it really should grab your attention. What this means is that the policymakers are actually considering a bail-in as an option in the future. And so what would that mean to you as a bank depositor? Well, let's look at a modern-day example to see exactly how a bail-in works. In 2012, Cyprus announced a proposal of a bail-in of 9.9% of any account that held over 100,000 euros and 6.75% of any account under 100,000 euros. So thus, if you had, for example, 20,000 euros in the bank, you would have received an instantaneous haircut of 6.75%, or 1,350 euros. And there wasn't anything you could have done about it. It was taken directly out of your account without your permission, without your approval. It's gone. Now, in the end, Cyprus left accounts below 100,000 euros alone, but they did confiscate 47.5% of all bank deposits over $100,000. So thus, when the FDIC and the policymakers start talking today about bail-ins, you can bet that it is a real possibility because they're thinking about it. Now, what can you do to protect yourself from a bail-in? I'm going to leave some links in the comments section below so that you can read for yourself, see where this information comes from, and get some idea of what you can do to protect yourself. Now, keep in mind that I am not a financial advisor. I am only repeating some of the suggestions that I've read. You decide how you will respond and act. Number one, don't get lulled into thinking that a bail-in could never happen here or that the government and politicians will help you. We have in America a $31 trillion debt, and it's about to get larger. Inflation is increasing the cost of entitlement programs as a portion of the government debt. Housing values are down, and that's going to lead to possible defaults in the future. And there are a whole host of other negative indicators that are not real positive right now. So the people of Cyprus never saw it coming, and it happened so suddenly that there was nothing they could do about it, and that will be the same situation here in America. It will happen overnight, and you won't be able to respond in a manner quick enough to get your money out of the bank. Number two is to diversify your assets and also where you keep those assets. Now, some commentators have recommended that you move to offshore accounts in tax havens. not all of your money, but most of your money, and just spread it around nationally so that you have some protection. Others have recommended gold and silver bullion and cryptocurrency, and this is where silver stackers and gold stackers are already sort of ahead of the game because they cannot attach, the government will not be able to attach your gold and silver inventory or collection unless all of a sudden they decide to literally confiscate your gold and silver like they did the gold back in 1933. That's sort of an unlikely scenario. They're going to attack the bank accounts and possibly 401ks first. But also be aware that where you store your material is also important. For instance, what we call safe deposit boxes are not necessarily safe. They can also be subject to governmental confiscation. And remember, whenever it happens, it's going to be immediate. Everything will be frozen as of that moment, and you can go in the Monday following the weekend announcement, try to get into your safe deposit box, and you will not be able to do so. Number 3, keep cash on hand, a small amount of cash on hand, in case the banks and their ATMs shut down. Now, this was true in Cyprus. When people went to get their money from the bank, there was no cash available. The ATMs were all shut down. And so what were the people supposed to conduct business with if they didn't have any cash? And that's a good idea to have a week or 2 or a month's worth of cash hidden away so that if something does happen, you will be able to conduct business in a normal fashion. Cash will be king. Now, some American banks are already limiting cash withdrawals to certain amounts. You can check with your own bank. Everyone is different. But this is a possible prelude of things to come. They're maybe getting us ready for something that's about to come. Number 4, no one is safe. The government decides what amounts to attack and what percentage they will take. Just like Cyprus made their proposal, they got feedback as to what they could possibly do, and it turned out that they left the small depositors alone, but they went after the people that they called rich. Now, the definition of rich is whatever the government says it is. During the Greek financial crisis, it was suggested by the government that anyone with 8,000 euros or more would be subject to a bail-in. And I don't think anyone would consider $8,000 or 8,000 euros to be rich, but that was what their proposal was. Number 5, keep your bank balances below the FDIC insurance limits. However, understand that those limits could change in a severe banking crisis. Just because the FDIC says today that deposits are insured to $100,000 does not mean that they could change it to $75,000 or $50,000 or get rid of the insurance altogether in the future. However, you're probably safe in keeping your money below the FDIC insurance limits. Like in Cyprus, they probably will not go after the small depositors unless they are really desperate. Number 6, pay attention to what policymakers are saying, how they say it, and how frequently they say it. The more you hear it, the more they say it, the more likely it is to happen. Well, that's it for today's video. I hope this information was useful to you in helping you to prepare for the future. I encourage those of you who are stacking gold and silver to add to your stockpiles. And if you aren't already stacking gold and silver, consider buying some 90% coins or some American Eagle silver eagles or gold eagles. Great stuff to put away for an apocalyptic day. Now, if you like this content, please subscribe to the channel and don't forget to hit the like and the notification buttons. That way, if I post a future video, YouTube will let you know that there's some content for you to view. Also, if you have comments or questions, please leave them in the comments section below. I'm happy to answer any questions you might have. And please join us every Wednesday evening at 6 p.m. Pacific Standard Time when I have a live stream that I call Pick My Brain, where you can ask me any questions about anything numismatic or coin collecting related. Anyway, thanks again for viewing, and I'll see you next time. Bye-bye.